1170 AM. It's Sunday night in the Caribbean month. Hubert McIntosh is a member of the Society for Financial Awareness, and he's the man.
Financial literacy provided by Hubert McIntosh,
CPA.
Financial literacy. Control your financial status.
Here's your host, Hubert McIntosh, CPA.
Good evening, good Sunday evening to you in South Florida, the Caribbean, and the rest of the world. Thank you for joining us. This is Hubert McIntosh, your CPA and a member of SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America and around the world, one community at a time. And I have joined with SOFA and starting with this community. So thank you so much for joining us. We're with you every Sunday night, 9 to 10 p.m. We are in the studio. You can call us with your comments, your feedback, your questions. The number is 954-792-1170. 954-792-1170. We are in the studio, but we are here from 9 to 10, but you have 24/7 access to us. You can call us directly, 754-366-7311. 754-366-7311. You can visit us on the web. Yes, financialliteracy.info. Financialliteracy.info. On there, you can go directly. We have a Facebook page. Yes, don't keep us a secret. Share the page, like the page. You still have time, because tonight is a very interesting topic. We're going to talk about reverse mortgage, as I promised you from last week. So you still have time to share the page, share the link, let people know that the CPA is on. We are on tonight. We're going to talk about reverse mortgage. So we have the YouTube, and we have the YouTube page also. YouTube. On there, you can subscribe to the YouTube channel. All the programs that we have done since January 1st. Wow, can you believe that? January 1st we started. Today's October 1st. Wow, we have completed a full 9 months with you. And I can tell you, it has been a great joy. I want to thank you. I want to thank you for the regular listeners. I want to thank you for the visitors. I want to thank you for those who are listening tonight for the first night. But for those of you oh my gosh, we have had listeners who have been with us since January 1st. You all know yourself. I just want to thank each and every one of you. I have a friend that he's been with us from January 1st, and oh my gosh, he said he's so looking forward. He said he's so looking forward to tonight's program. So he kind of put me on the spot, so I have to bring it tonight, but it's all good though. So I thank you guys. So we have a Twitter page also. But back to that YouTube page. When you go on the website, financialliteracy.info, you can click on the YouTube. You go to the YouTube page. You subscribe to the page. You can still listen to the stuff, but why the subscription is important is that once you subscribe to the page, anytime there's an update to the page, then basically it will notify you that this page that you have subscribed to, there's new information. So the topic tonight is reverse mortgage. We did this topic already. We did this topic on June 22nd for those of you who were with us and remember. But that night, I know a lot of you didn't get a chance to listen because that night was Father's Day. Father's Day was June 22nd. So we had broadcast reverse mortgage on that night, and we realized that many people may have not gotten it. As a father, you may have gone out. Children may have taken you out. Your wife or your loved ones may have taken you out. So you may not have heard that show. But what has happened, why it is so necessary to bring it back tonight, we have been getting a lot of feedback about people wanting to know more about reverse mortgages. So we have been getting that feedback because it comes in line. Last week we kind of finished up long-term care. But remember, when I say finish up, there's so much material. It's hard for us to finish any one topic. We can introduce you to a topic, even like tonight. There's so much material that I have to share with you that I'm going to give you bullet points. I'm going to introduce you to topics, but a lot of them I'm not going to be able to go deep dive because of the limited time. But you know how to contact us. You have phone number for us, 754-366-7311. You have the website, financialliteracy.info. So you have the Facebook page. The Facebook page is there. The YouTube page is there. The Twitter page. You can also email us, support@financialliteracy.info. Support@financialliteracy.info. So we have made ourselves accessible to you. So I encourage you, any questions you have, comments, feedback, please reach out to us. Okay, we're here for you, because one of this mission of this program is that, remember that statistics I shared with you that FINRA did 3 years ago, saying that 74% of Americans were financially illiterate. So I've joined with SOFR and I've come alongside you guys because we want to do it one community at a time. And this is a community I've started with. So what we want to brag about, yes, I'm telling you straight, what we want to brag about is when they are talking about that statistic about people being financially illiterate, I want this community to be able to say, we are not in that statistic. We're not in that statistic. We have our resident financial literacy expert. And whatever I cannot find, whatever I don't know, I will help. I will find out for you. But you visit the website and you'll see the wealth of information we share. We have the recordings and so forth. So we believe that we are capable to share with you things financially related. If it's not financially related, then some of the topics we just may not be able to, because we are not experts in that topic. But we believe in the financial topic. We're very knowledgeable about that. So I just want to thank you for your continued listening and your continued support and feedback. So tonight we're gonna go into reverse mortgage. But I want to clear up a definition. I want to clear up a definition that I hear a lot of times, or a couple of philosophy that's out there. All right. So a lot of times people will go and they'll listen to other people. They'll listen on the radio or the TV, or they'll even go to workshops, or even workshops that's put on in their synagogue or in their church or wherever they go. And then there's this desire. You hear so many people say it, I want to get out of debt. A lot of people make that statement. And you have even speakers teaching people about getting out of debt. Okay? That's a lofty idea. There's nothing wrong with striving to do that. But here's the thing. Here is the misunderstanding I want to help clear up tonight. When people say debt, there is a confusion on what debt. What's the definition of debt? A lot of times people will see, even go to the dictionary, and you'll see multiple definitions. And one definition you will see that says, if you owe some money, if you buy something and you owe some money, and they'll say that's debt. All right. So I'm putting on my CPA cap now, and here's what I am gonna I'm gonna contradict that definition, debt, because owing somebody is debt. That's what a lot of people think. So they are striving to get out of debt. But here's the next word that's the confusing word: the comparison between debt and leverage. So for those of you who don't know leverage, I want to introduce you to leverage, because there's this confusion between debt versus leverage. So let me put some clarification on it. Yes, debt starts with borrowing money. Yeah, borrowing money. That's where it starts. But what's the difference then? But Hubert, you're contradicting us. You're confusing us. But what's the difference with debt versus leverage? You are in debt when you are unable to pay that expense with your current cash flow. So if you owe somebody $1,000, but in your bank account you have $100, yes, you are in debt. But let's flip the switch. You owe somebody $1,000, but you have $10,000 in your bank account, or even $10,000 in your investment working for you that you're earning money on. You are not in debt. You have leveraged yourself where you're using your money to do investments while you're using other people's money. You hear the terminology OPM, other people's money. So using other people's money when you have the money to pay it is not debt, it's leverage. So I know that gonna mess up a few of you because I'm introducing it to you, and you will see why, because we're going to talk about reverse mortgage. And I think it's very important that I lay the foundation between debt and leverage. All right. So let's go then directly now into reverse mortgage. So here's the next thing that people says, well, if I pay off my house, if my house is free and clear, I am out of debt. Hey, listen, that is a lofty idea. That's beautiful thing. Paying off your mortgage and don't owe any money on it is something great to strive for. But here's the but. Remember what we're teaching. We're teaching finance. When you make a decision, there are two things regarding that decision. You have an emotional decision and you have a financial decision. Paying off your home to where you owe no money on it, it's a good emotional and peace of mind. It's a good peace of mind decision because it gives peace of mind. It does, yes. You know, I've no mortgage is peace of mind. But here's the contradictory statement I'm going to say. Having the house paid off, it's not necessarily the best financial decision. I know, I see the rebuttal, I hear it out there. It's not the best financial decision, and that's what we're going to talk about tonight. Because remember, what is our focus? Our focus is on the seniors. So what we're talking about in tonight's case are people who are over 62 years old, because you cannot get a reverse mortgage unless you're 62 years old. So let's put the framework. That's the focus. That's the focus of tonight, reverse mortgage, and it's for people who are 62 years and older. So you may say, well, but I am not 62, so you're not talking to me. Yes, I am still talking to you Because here's the reason. You may not be 62, but you have loved ones in your life that's 62. Yeah, you have loved ones. It may be a mom, maybe a dad, maybe an aunt, maybe a friend. It may be a mentor. Every one of us as seniors in our lives. So a lot of times we'll hear a topic and we'll say, well, that's not related to us. Yes, it is, because what you know, you can share with others. So why do I say it's not a good financial decision? Remember last year, look at the context. Please don't forget the context. Last week, we were talking about long-term care, and we were talking about the cost of long-term care, and we were talking about the average in Social Security, and we were saying, well, if the person's only income is Social Security, then that person may have challenge if there is a need for long-term care or anything like that. So that's the context. So please don't miss the context. So what am I saying now? So I had a senior visiting me this week. All right. So I am using her as an example. You know, she may be listening tonight, but what I shared with her, and I find that I've been sharing that a lot of people don't realize to get a loan, if you have a home that's free and clear, whether it's 200,000, 300,000, whatever the case may be, and that person is not employed. Here's what a lot of people don't realize. If you're not employed, but you have a home with all the equity in it, where are you going to get the loan if you have a need for cash? Think about that for a minute. This lady that was with us, she thought that her Social Security would have been able to qualify her if she needed a loan from the bank. The bank does not consider your Social Security as income. They don't. So they are not going to consider that you have income. So they don't. They want W-2 income. That's the scary part. There's another thing. You may even be a self-employed individual. And this scares me a lot of times. As a self-employed individual, you may have income, but because that income is not W-2, income, it may even be income from a K-1 or income from a 1099. Let me tell you something. A lot of banks doesn't even want to give a loan on that. So you may say, but why? Here's the reason. And I'm letting you know this. Here's the reason. You have your business. You have income. Your income could be so good, $100,000, $200,000 net profit. Or you could be a subcontractor, or you an independent contractor, you get a 1099. Here is the rationale that the bank use. They says because it's a business and it's an independent contractor income, that income is not fixed. So look at that now. Here's this person, has their own business, 100,000, 200,000, whatever it is. And the bank will tell that person that their income is not fixed. But somebody who makes $40,000 in W-2, and this is the part where baffles even myself as a CPA. Someone will make $40,000 with a W-2. And another person who had their own business on their K-1 or their 1099 says $100,000. And a lot of times that W-2 income of $40,000 will be looked upon more favorable. Yeah. So it is necessary for me to give you this background. So what happened is that seniors who may have their home fully the equity, full equity in it, and they don't have an income, they may have a challenge getting money from the home if they need it. Hence, the topic tonight, what's the solution? The solution is reverse mortgage. So I had to lay that foundation for you, okay? This is Hubert McIntosh, your CPA and a member of SOFA. SOFA, the Society for Financial Awareness. We're in the studio, 954-792-1170, 954-792-1170. Call us, give us your question, give us your feedback. I would like to hear the things because I know the first part so far, I have thrown some stuff at you that may have been contradictory because you may not have heard it before. Call, give me your feedback. I would love to hear your opinion. And even any bankers out there or any mortgage brokers that thought that I misspoke or anything, please call. I am willing that if I misspoke, you can clear it up for the listeners. Call and correct me. If there's anything that I said out of line, call and correct me because I am willing to learn. Because I've said before, if you know of banks that will give loans outside of the specifications that I just mentioned, please call me. Let me know, because here's what I know. If I know that bank, I will be able to give that bank a lot of business because these are some of the things that I've been hearing. So I am willing to listen. I understand we have a caller. So, caller, you are on the line.
Good evening. How are you?
I am very well. Thank you for calling.
Ask the question.
Yes.
I do the reverse mortgage, but there is something that people would say I want to use it. Is that every month they put money on the principal. And then when I asked, they said that's what I signed up for. And I said, the amount of paper that they give you to sign, you don't have a minute to read them. And then just put them on you to sign them, and when you come now, you come to buy.
You're fading in and out, so I'm hearing a part of what you're saying. I'm not hearing everything you're saying.
Yes.
Your connection is I hear some words and I don't hear the other words. But I heard the first comment you made.
Yes.
About the increasing the principal. It's a great observation, and I'm glad you called to talk about it. What happens with that is, so take for instance, I don't know how much you took out, but here's an example. Let me just use an easy calculation. Say for instance, if your reverse mortgage is 100,000, just use that for calculation. And if it's 5% interest, so, and you don't have to pay it, but what is happening every year, that 5%, so basically you owe the bank $5,000 plus the 100,000.
Okay.
But because you did not pay it, so what the bank does, it adds the 5,000 to the original 100,000. So now your principal is 105,000.
I understand.
And then that keeps continuing year after year. So I celebrate you. No, it's a good thing you did. I celebrate you because here is the thing that you did, which I believe was so great. And I celebrate you because what happened is that you have made yourself having access to cash. Because of your reverse mortgage, you have
I'm not getting any cash from it. And that's why I do it, because I heard that you would get money per month.
Well, it all depends. If you want cash, you can get cash. It depends on what you sign. Did you sign up just to get the line of credit?
The line of credit, and they said that I would get some money every month. But what happened, they said that I should not have taken out the 15,000 that I have left in the bank. And then because I have a business was doing, I needed the 15,000, so I took the 15,000 out. So they said that's why I'm not getting any money.
Well, your case, I want to talk more with you. So make a note of the number, and the operator can get your number. But let me give you the number so other listeners can hear it, because I want to help you with your specific case, because there is something somebody's not telling you. So I want to help clear that up for you. So take a note of my number.
Yes.
754.
Yeah, let me go and get a pen, because the radio, I didn't turn the radio down, so I'm getting an echo, so I come in the bathroom.
Okay. All right, then what happened? You give the operator, you just say she'll take the number from you. Mm-hmm. She'll give you the number, and I want to help you. I can help your case for you.
Yes.
Okay?
Yes.
So you call me. Make sure you call me. And we'll take care of this for you.
Yes. Okay. Let me get.
You got the pen, or are you gonna do it after?
Yeah, I got the pen now.
All right. Take the number then.
Mm-hmm.
754.
754.
366.
366.
73.
7311. And the name?
Hubert. Hubert.
Okay.
Yeah, so I'm Hubert McIntosh, your CPA, okay?
Okay.
Yes, you call me tomorrow. You have direct access. You call me anytime tomorrow. I'll be expecting your call.
I don't. I think I'm going to do a procedure tomorrow, so I won't be able to call you tomorrow.
Well, you call me
in
when
the evening.
Call me when you can. Okay?
Okay.
And I will help you with your situation.
Mm-hmm.
Not a problem, okay?
Yes, thank you.
Thank you very much. Have a good one. I understand we have I want to thank that caller. Thank you. That is a very important question I'm going to help her with. We understand that we have another caller on the line. Caller?
Hello?
Hello?
Yes. Hi, Mr. McIntosh.
Hi, how are you?
All right. I would like to ask you some questions, but I think I'll ask you off the radio.
All right, no problem. Then what you do then, the operator is going to take back the call. She's going to take back the call, and she's going to give you my info. She's going to take your info, and we can help you.
Okay.
All right?
All righty.
Okay. Thank you very much for calling. Thank you.
All righty. Bye-bye.
All right, great. So I want to thank those two callers. So I'm just glad you guys are out there listening. And I know there are topics sometimes, basically, it can be a little bit confusing. Like that lady's situation, I know we'll definitely be able to help, because there is a little bit of confusion there. And we know we'll be able to take care of that and help her. The most recent caller, the line dropped. Caller, if you could call back in, so that the operator can take your information. Your call dropped. I don't know what happened there. So if you could call back in 954-792-1170, 954-792-1170, and we will take care of you. So I want to thank you very much. Thank you, guys. As I've said to you before, the fastest hour of the night is Sunday night, 9 to 10. It's the fastest hour of the night. So, oh my gosh, so we are gonna step aside for a little to take a commercial break, but I'm telling you, we got some great information for you tonight. So I want to thank you for sticking and staying. We're getting ready to take a break, so stick and stay with us. We are in the studio, 954-792-1170. So hang with us. We will be right back. Welcome back. Welcome back. Thank you for sticking and staying with us. It's Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness. We're in the studio, 954-792-1170, 954-792-1170. We have a couple of callers already. We've been getting feedback, so I want to thank you. So keep it coming, because if there's anything out there that we can clear up for you, please give us the opportunity. We're in the studio, 954-792-1170. But if you don't want to be and you want to call us directly, 754-366-7311, 754-366-7311. You can visit us on the web, financialliteracy.info. financialliteracy.info. You can go on there. There's a comment page there. You can make your comments. You can ask questions. You can submit the questions to us. You can email us, support@financialliteracy.info, support@financialliteracy.info. You can link us there on the Facebook. You can link your Facebook. You can like our page. You can share any message. Share it with your family. Share it with your friends. Please don't keep us a secret. And as I've said to you, all the previous shows have been recorded. We even had a previous show regarding reverse mortgage. You'll go to the YouTube from the website. You'll go to YouTube. You'll subscribe to the channel. The reason for subscribing is that anytime something is added to the channel, you will be notified. So this program will be recorded, is being recorded, and we had also done one on June 22nd, which was Father's Day. That program is in the YouTube, and it's called Reverse Mortgages for Seniors. So when you go in there, you type Reverse Mortgages for Seniors, because all the shows since January 1 has been there. So instead of scrolling right through, once you go into the channel, you look for Reverse Mortgages for Seniors. And tonight we're going to call it Reverse Mortgages for Seniors Part 2. Based on what I have to share with you, we may have to carry this over to next week, because the first half just ran away. And what we're going to talk about, the overview I have for you tonight, we're going to try to get through as much as possible. But keep in mind, as I said, there's just so much we can share that we'll give you bullet points. We will elaborate on certain things. But if there's something, make sure you have your pen and paper. And if there's something that we mention that you want to know more about, please reach out to us, okay? And at the same time, we're in the studio. You can call us 954-792-1170. Why it's important, why I mention calling in the studio, because a lot of times you'll have a question and you'll have a comment, and you don't realize that question or that comment, how much it's impacting others. Because if you have a question, I can guarantee you that there are other people with the same questions. And if you have a comment based on your experience, whether it's positive, whether it's negative, because this is how we learn. When you call and you share with us your experience, then we can go dive into it. We can go deep dive. Like one of the caller earlier, she called and she has a situation, and I sense the detail of her situation, and we're going to help her with that situation. And when we help her, we're going to sure to report back to you to let you know the details of it and how did it work out, okay? So tonight, the overview. We want to go over a reverse mortgage overview. We want to go qualifications for a reverse mortgage, benefits of a reverse mortgage, loan cost, common uses of proceeds, payment options, reverse mortgage products, steps to getting a reverse mortgage, next steps, and some additional resources. So you see that the list that we have to go through. We're going to go through the overview. We're going to go to qualification, benefits, loan costs, common uses of proceeds, payment options, reverse mortgage products, steps to getting a reverse mortgage. So what is a reverse mortgage? What is a reverse mortgage? You know, a regular mortgage, when you hear the term mortgage, a word is left out, so we shorten it. When you hear about a mortgage, where someone say they have a mortgage, that mortgage is called, there's a word that's left off. That term should be forward mortgage, because what it means is that you take out this mortgage as a collateral and you use your property as a collateral, and you're going to be making payments going forward. Hence a forward mortgage. So the reverse mortgage is the reverse of that. You already have your house, you have equity in the house, and you're taking out a reverse mortgage. So instead of you paying the bank will be paying you. Okay? So the reverse mortgage, it's a way for homeowners 62 and over. Please don't miss that qualification. 62 and over. If you're under 62, you will not be qualified for a reverse mortgage. So I want you to, that's the first criteria, 62 and over. So what this allows you to is to access equity in your home. So here's the next thing. If your home don't have any equity, don't even start thinking about a reverse mortgage. See, I'm breaking down qualification for you. 62-year-old and your home has to have equity. If your home has no equity, you will not be qualified for a reverse mortgage. Because the reverse mortgage is a loan against your home. Yes, it's a loan against your home, and you have to have equity in it. One of the beautiful things is you do not have to pay back this loan for as long as you live in the home. And sometimes that is confusing in of itself, because I'm telling you, you don't have to pay back. You don't have to pay anything for as long as you live in the home. And you're like, but Hubert, that's ridiculous. But that's it. So here's one of the criteria. One of the things you have to look for is in the sense that if you have a home that you're planning to move soon, maybe the reverse mortgage may not be a good thing for you. Maybe you wait until you move and you get the reverse mortgage on the next home, okay? Because the key part of it is that you can continue to live in that home without paying any money. All right, you still own your home, and this is one of the confusing things. I hear people out there and says, don't tell me about reverse mortgage because they're going to take my home. You still own your home through the entire term of the loan. Yes, the home is still yours. You still own your home. And one of the great things that you heard me congratulate the lady, and you heard me talk about earlier with a senior having equity in a home and unable to get any money from the bank because they don't have any W-2. But a reverse mortgage solves that problem, because a reverse mortgage can help you access cash based on the value of your home. So here's the next criteria I put in: the value of your home without you having to make monthly payments. So let's summarize that then now. So to get reverse mortgage, these are the first three things you have to look at. The first thing is your age. You got to be 62 years older, 62 or older. You got to have equity. And how do you measure equity in your home? The equity in your home is measured by the value. So make a note. You have your pen and your paper. Make a note of this formula. Equity equals value of home minus the liability on the home. So follow that formula. Equity equals value of home minus liability, what you owe on the mortgage. That's your equity. Okay? All right. I understand we have another caller on the line. Caller, you're on the line. Hello.
For you.
Hi.
Good evening, Mr. McIntosh. I have a quick question here for you.
Yes, thank you.
On the about the reverse mortgage.
Yes.
You said you still own the home.
Yes.
And you don't pay back anything.
Yes.
God forbid, and something happens to you. What happened to the home?
When you say something happens to you, tell me what if something happens to you.
No, say for example, a person for example, they have a reverse mortgage, and then maybe death or accident or something happened. What happened to that old situation?
All right, great situation. Why I asked you, because I wanted you to be specific. Say, for instance, if you're sick, if you got a sickness, any type of sickness, and you still live in that home, there's nothing that it just keep going. It just keeps going, because remember, you are not making any payments. So your payments are not determined whether you're sick or not sick. The key criteria there that you mentioned, and I'm glad you asked that question, is are you living in the home? Once you're in that home, a reverse mortgage, remember, a reverse mortgage is a non-recourse loan. And why I want to remind you of that, because this is not something you hear people talk about foreclosure, you hear they talk about different things. That can never happen to a reverse mortgage. Never.
Okay, my next question is, you're living in the house.
Yes.
You have nothing to pay back, whatever. What in a situation if the person is dead?
All right, beautiful. Okay, not that the person is dead. The beautiful is not that the person is dead.
I know. You know what I mean.
All right. So here's the thing, and I'm gonna use, for easy explanation again, I'm gonna use that $100,000. So say that person took out $100,000, and that's a reverse mortgage. They took out $100,000, and for 10 years. It's continuing for 10 years. So now that person owes $150,000. They haven't made any payment, but now they owe $150,000, and then the person dies. Great question. Here's what happened. Upon death, what the mortgage company is going to do, because initially when that person got the reverse mortgage, they had to do an appraisal. So upon death, there will be an appraisal done on the property. So if the property is appraised at $200,000, if they appraised at $200,000 and they had owed $150,000, the beneficiary of the person that died will get the difference, will get the $50,000. That's how that works. If the value so in order the person get the $50,000 and the house is gone to the bank. Yes. The person, the house gone to the bank. Person get the $50,000, or if the person has the ability to pay the $150,000, they keep the house. So a lot of times when you hear someone says, and this is one of the common thing you hear with reverse mortgage, someone will say, oh, they took my house. They took the house because what happened is that the person either choose to take the representative of the person that died, either choose to take the difference. Or let me point out the other scenario so that for you and for others who are listening. Say, for instance, though, that same $150,000 that the person owes, suppose that property is valued, when it's appraised, is valued at $100,000. So here it is. The property is valued at 100,000, but the person owes 150,000. So why you hear me use the term non-recourse? Contrary to other mortgages, if the person dies and what they owe is more than the value, the estate of that person would owe the difference. But the power of the reverse mortgage is if that property is upside down, the estate don't owe the bank, but the bank will take the property.
Okay. I got you. Thank you so much.
You are so welcome. Thank you for calling. We really appreciate it, okay?
You're welcome. Bye.
All right, take care. And we want to thank that caller again. It just shows that, I'm just glad that you guys are responding. And I know the topic can be very confusing because, as I said, it's contrary. And let me say this. Let me say this before I go further. Because remember, the laws were changed. The laws were changed in 2010. So whatever someone knows, if what you know was prior to 2010, you basically know nothing about reverse mortgage because it was changed and HUD took over. All right? So moving along, this is Hubert McIntosh. We are in the studio, 954-792-1170 to take your call. 954-792-1170. Give us a call. Help us to clarify any discrepancy you may have out there, or give us your comments or your feedback. If I may have misspoken about something and you want to educate me on that, I am willing to learn. So thank you very much. So we spoke about the qualification. So here's a power tip. Here's a power. Guys, please make a note of this, because this is one of the things that separates the reverse mortgage from other things. There are no income or health requirements. We're going to come back to that because we understand we have another caller on the line. So we're going to go and we're going to take that call. Caller, you're on the line.
Yeah, hi. Good
evening.
I would like some information.
Yes.
I have a family member.
Yes.
She's 70-something.
Yes.
And she had a reverse mortgage, and she lost her home a year ago. They're saying that she owed taxes and insurance. Well, we get all the insurance papers together, and she didn't owe any insurance. They said she owed taxes and said that she owed over $40,000 for lawyer fee and other things, and she lost her home. That's not right.
No,
anything can be done about it?
There is something missing in that picture. There is a missing piece of the information, because what is happening there, as I said, I don't know the full details, but if it's a detailed story and you want to talk to me more about it, but something seems amiss there, because maybe she did not get some proper guidance, because what kind of taxes would she owe? Is it property taxes?
Yes, property taxes.
And
she had an attorney, but it was no good.
Yes, because property taxes, if you say the property taxes was 40,000, or the lawyer fees, what was 40,000?
The taxes was $8,000.
Okay.
And they said the lawyer fees and different fees, it came up to $40,000.
Oh my gosh. Well,
and she tried to pay the $8,000 and they would not accept it.
All right. Let me tell you what has happened to that lady. Oh my gosh. It's one of the very common thing out there. That lady got a shyster attorney. Let me tell you one of the things that's going on, and it is so important that people get with professionals. I see people doing it now, even with foreclosure defense. And here's what they're doing. And I am thinking if something like that happened to that lady. What people are doing, they go to an attorney, and the attorney said they're going to defend the case. And for them to defend the case, they have to give them $2,000 and $500 per month. All right. So here's what happened there. So you think about that now. $2,000, $500 per month. But the person mortgage may have been $1,000. What these attorneys are telling the people, oh, since I am defending you and you're paying me $500, you are saving another $500 because you're not paying the $1,000 mortgage. So that's how they trick the people. So what happened now? This case drag out 1 year, 2 year. You do the math on that. If you're paying $500 a month and it's now 2 years, then that person now has paid $12,000. And plus the mortgage, the attorney loses the case. So the person now owes that mortgage of $1,000 for 24 months. So now it's 24 months for the mortgage, 12,000 for the legal fees, and it looks like, but you can call me and let's discuss this in detail. But this is one of the things, and that's why I come on to this show, and I want you guys to be aware of what's going on out there. There's lots of shysters out there. It's happening. People filing bankruptcy. I see people owing $20,000, $30,000, and the attorneys telling them to file bankruptcy. Well, let me tell each and every one of you there. You owe $20,000 and $30,000. You are not a bankruptcy candidate. If an attorney tells you that you're a bankruptcy candidate for $20,000 and $30,000, that is crap. You are not a bankruptcy candidate. So I sympathize with what happened with this lady. So call me. Take the number. Take my direct number.
Okay.
754 366 7311.
7311.
So
okay.
754-366-7311. Call me directly and I will take that up and I will discuss it with you and we can see what we can do and what are our recourses, okay?
Okay, thank you.
Thank you very much for calling. We appreciate.
Have a good night.
You too. You too. Thanks for listening.
Bye.
So folks, you hear it. You did not hear it from me. You hear it from the caller. Folks, let me tell you, you keep hearing me harping about getting a professional. When I keep saying that to you, I am not trying to raise unnecessary red flags. That's not what I'm doing. But I am trying to make you aware of what's going on. Just because you call somebody and they say that they're gonna help you, it's not necessarily that they're gonna help you. That lady that just called, I know exactly what happened. It is very, very common. It's more common than you think. Anytime a client or a prospect, somebody tells me, oh, I am paying the lawyer a monthly fee to defend my foreclosure, I know that person is being ripped off. If you get an attorney who's going to represent you, and yes, attorneys, I know some of you may say, well, I am bad-mouthing, but listen, you guys who are good, you know yourself. The ones who are bad know themselves. But anytime I hear an attorney telling someone, you pay me this down payment and you pay me $500 a month, that is, I have not seen those cases work out to be a good formula. Because here's the thing, you're paying for 2-3 years and you're paying $500 a month. Not a very comfortable situation. But as I said, we will continue this. We'll continue this part 2 next week. Oh my gosh, this was exciting and interesting. At least I get to share with you. So remember, Next week, we're going to follow up. This we're going to record tonight. And also, to get ahead, we have the show recorded June 22nd. It's in your Reverse Mortgages for Seniors. So I want to thank you for joining us. This is Hubert McIntosh, your CPA and a member of SOFA, the Society for Financial Awareness. Visit us on the web, financialliteracy.info. Thank you very much. See you next week.
Financial literacy with Hubert McIntosh on Waves 1170 has come to an end. Don't be mad.
She'll be back next week
on www.waves1170.com.